Okay, guys, as you all know me,
This guy,
is
thank
a
you.
mentor, Nasdaq Ninja. So, guys, today we're gonna talk about major key. So, the things that I want you guys to understand is that these things that I'm giving you guys is actually like tools. You understand? So, there will be a point whereby you need to actually put this thing together. You understand? Like the diagonal support, the major support and resistance, so forth and on, the patterns and everything. So there will be a point whereby you need to put those things in all together. You understand what I'm saying? Because right now, what we're giving you guys, we're giving you guys tools, so that what is it that you need to see before you can take a direction? What is it that you need to have if it's time to use major key? Which points did you need to understand, like those kind of things. So apparently, what is major key? Actually, what is major? A major for me is something big, something strong. We can say it's a zone as well. Understand? We can call a major a zone. So when we say it's a major key, it means it keys from the major. So if something, okay, like here, guys, it's like we're using our common sense. Understand? We need to understand that, okay, if this thing it's a key to the major, it can have the same impact as the major trend has, but it's a major key. Like we used to say these minor keys. Okay, so people say this trend inside trend. What if the trend is not applicable, the trend inside the trend? So we can apply what? A major key. So what is a major key? You're taking it from the major trend straight to the upside to the other trend. You understand? So a good explanation is that the what is it that you need to have uh to in order for you to say this is a major key. You understand? So first thing first, I can see needs for the major key. So the first thing first, guys, so everything that we're teaching you guys, we're busy like building a book for it. We're gonna cover these things, and then once we're done with the book, you're all gonna have the book. So this is gonna be like a book. The first major book in smart trade will come from this particular things I'm teaching you. So those things are probably the one that's working on indices. Trust me, I'm not choosing from support, resistance, trend line. I use all. So I use this thing based on the time. What is it that I can use at this moment? So sometimes I'll tell you that, okay, this time around we're using major key. Last week I was using major key. The week before last week I was using diagonal support. The other week I was using major zones. You know why? Because it depends by the nature of the market. You can't control the market, but you can follow what is it that the market does to us. You understand? So first thing first that you need to have a major trend. A major trend. Secondly, you need to have a diagonal support and a diagonal resistance. And diagonal resistance. So those are the two things that you need to have. These are the most, actually in a pattern as well. Let's count a pattern inside. Let's count a pattern. So even a pattern, it's actually needed. You understand? You need to have these particular things in order for you to consider yourself saying that, okay, now I can apply major key. But you don't force it. You don't need to force it. I have teach this, like most of my students, this strategy, they killing it, understand? But the key part is that if you don't have the major, you don't have the major key. So that's when the problem comes. So where does this strategy works? Everything that pairs with GBP, JPY, everything that pairs with GBP. Frequently. So nonetheless, guys, let's jump on the chart. Understand? So first thing first, let me give you guys a clarity of the keys that I told you about. So let's say this is your major, guys. It's a simple thing. It's a major. So this point, we'll say it's our diagonal support. So we're gonna mention everything that we mentioned there. So we're gonna say this one, it's a diagonal resistance. So we're gonna say DR, and then we're gonna say this one, it's our diagonal support. So it will be our DS. So when someone tells you that the trend doesn't work, support and resistance is the one that works. It's probably like a lack of information if I were to say, because diagonal support is just support. Support and resistance is just diagonal. Support and it's just the other one is horizontal and the other one is vertical, is diagonally. So there's no way those things can work. They use the same rule. So you need to be creative, you understand? So the other thing, guys, I'm gonna start with my high low from, I mean my high from my high low, and then I'm gonna do something like this and then take it to this point. So where does major key apply? It applies from this point. So from this point, the reason then we're saying this is a major key is because we always say where the market reverses, there's a support. Understand? Why can't we say where the market reverses, there's a what? There is a diagonal support, because you find something like this. So it means if I break this point, obviously I plan to retest at this certain point, then I'm gonna be dropping to the bottom. Understand? Check what is it that's gonna happen again. You're gonna do the same thing. It's major key again. So where they say it's correction, you can come up with another idea. You understand? Doing a major key, you know, once it breaks here, it can play around here as many as it wants. It can reverse, come back inside, can do a lot of things. But as much as it's inside this, you know, you are inside a what? A major key. Once it breaks, you do the same thing. Where it reverse, you create your what? Your diagonal support. It's the same story. So these points here, they become your what? These points become your support, like this ones. Understand? So those points, they matter in the market. So they become your support. So every time the market hits here, you understand you have support and everything. So you follow the rule of support, but as well, you follow the rule of what? Diagonal support. So this thing, it's a journey. You understand? It will take you from the top to the bottom. There is no another way it wouldn't take you. Once you spot a major and the major key, the first major key, you kill the market. Non-stop, like there is no way you can kill it. You understand? Let me hear what is it that you're asking. So I don't know what is it that most of you are on. I don't know what is it that most of you are complaining. You're saying audio is low, so how can I increase audio? But let me try. Let me quickly try that. Let me try increasing my mic, guys, because I hear most of you saying you can't hear me. I don't understand why. I don't understand why. So guys, I don't know what is the problem, but I don't know if you guys can hear me now or what. Oh, audio is on 100%. Okay, okay. The audio has no problem. Okay, so it means we can begin. Yeah, we can begin. So guys, nonetheless, so what you have to understand at this certain point, the market can do it, can come back and retest here, and then chooses what? Chooses to break. Okay, this is the third touch rule. You know what is gonna happen. And then let's say this is our third touch, 90% rule. I saw one student giving me a feedback on the 90% rule, and I liked it very much because he uses it on gold and it's working. You understand? It's working everywhere, guys, everywhere. You just have to understand what is it that you're doing, and then the market does what? Retest. So these things, guys, is the major key. You know, this thing, you kill Nasdaq, you kill US state, you kill German state, you kill GBP, JPY, you kill everything. You understand? But the process is that you need to get what? a major trend. Once you get the major trend, it's chai. So let's take it to the chart, because we're trading the chart. Understand? We're trading the chart, not trading the board. So we need to take it to the chart. As much as you can see, this side we had a major key, but nonetheless, I'm gonna remove everything. So what is it that we do once we get to the trend? We start from an H4 time frame. It's possible for us. It's possible for us to start from daily time frame, but I like H4 when I see my chart very well. Like I can start here. It's possible for me to start here, but I like H4 because I can see the whole view of this market and the understanding. You understand? What is the understanding of myself here? Guys, simple thing. Understand? The understanding is that I moved like 50% from this point to this point. So the 90 chances of me getting there, it's high. Understand? So I start with my lower, my highest point, and then once I have my highest point, and I do this. So guys, you need to understand from this point here, we had a sort of like a trend. It's obviously we could have a major trend and stuff, but okay, let's start with the past. Understand? Let's start with the past. I don't like creating the past because I know that everything that happened in the past will work. What about the future? Understand? But nonetheless, we can start talking about it and see the major key operating. So let's say was our major trend. Understand? This was our major trend. So typically and practically, we know that you wouldn't catch it here, but you were gonna catch it here. How? Simple. A, B, C, D. So what you do when you use the major key, guys, you make sure that you have a major trend. Obviously, here we know it's our major resistance. You understand? So what you do, you create a simple thing. Guys, I don't want you guys to create this thing only on what is this on the current, on the previous market. I want you to be able to create this thing on the current market. So what I want you to understand is that this point, guys, it's a major key. It's from the major trend. So it's a major one. So if the market chooses to reverse here and then we take it from the bottom here and then it breaks and closes outside, sell. Don't play with it. The reason we didn't touch the peaks here is because we had the peak and the peak and the peak here. So we used the previous one to control us to understand the new ones, because this one was sort of like a manipulation of knowing that the market will reverse here. Touched here and then what? Went to the top. In what possibilities of us catching this thing in another manner? We had a support at this point. We had a support at this point. So it's a simple theory, you understand? You just have to get it in many ways. So at this point, obviously, we're going to reverse if we don't break it, but we broke it and closed outside. Check what is it that we did. We dropped heavily to touch this point. So I always say, if I move from this point, I need to touch this one. If I move this one, I need to touch this one. If I move this one, I need to touch this one, touched. And then at the end of the day, it decided to break. It's allowed as well. So let me show you something. Don't be surprised when the market reverses. You need to be updated. You check. If you see this point here, it's a retest from the previous one. Understand? It's a retest from the previous one. Guys, stop writing on the board when I'm teaching, because now I'm getting disturbed. So, okay, I got a little bit of disturbance, but nonetheless, can't complain. So, if you can check, same story. Check after the breakout of the major key. It's a simple thing. I want you to understand the breakout of the major key. Once the trend breaks the major key, the trend does what? Breaks and closes outside, gone, deep down. But as always, there is retest. We know retests are always allowed. At this certain point, we had a retest. But at the end of the day, once it breaks out, closes outside, even if you enter here, you can't blow your account. Check the drop. Came back, retested. What is it that you do? You do a theory that I taught you. You take a trend from this point, you put it here. Check now. Once it broke here, it did what? Passed. So you won your A game. Simple as A, B, C, D. So as much as I can see, the market doesn't have a double bottom here. I don't feel like I can create a new highs without a double bottom, unless if you state you have another nature that I don't know. But nonetheless, I need double bottom here in order for me to create a new highs. So now we're going to go to the current market. What is it that we see? So we're going to create a trend from this point. So you use the first and the second one. The third one, it's a bonus for us. Obviously, they know we're going to enter here. They're going to manipulate us. But the first one and the second one are most valid. So what you do on the third chart, once it passes, you let it. When it comes back, you enter. You don't play with it. And then we're going to do another thing, okay? There is more traders which are using major key, guys. This strategy, it's alive. Is the only strategy that built me to be like this today. I'm from major key without no lies. So I respect major keys more than anything. Well, once I see major keys, just know that is my month. I'm gonna make heavily cash. Understand? You can take major key from anywhere. It depends by what? By the reversal and the touches. Understand? You can take it from this point here. You can take it from, it depends by the touches. You see, once you see a proper fall and the second fall, just know that the third one is valid. The third one became respected, but at the end of the day, it broke, came back inside. This is how the market it is. Understand? Sometimes it will manipulate you, but at the end of the day, here, if you entered here after a breakout was outside, you won. At the first touch, you know it's a manipulation. Touch you there. You understand? Third touch, guys, it's a reversal. The other thing, it's a bonus. So this one, I'm gonna take it here. Remember, I'm gonna use the first one and the second one. So if you can check, the market did what? The market moved here and then started reversing at this point. At the end of the day, did what? Retested at the top, and which is allowed as well. But what killed it here is to reverse here. You understand? But because there's major key, you do what? Two keys again. You put another key where the market reverses. Check when it breaks. You kill. When it breaks here, you kill the drop. You kill the drop. You can kill as much as you want. Let me go to M15. Let me show you. So it's like those people who create more support. Understand? Now you're creating what? More diagonal support. Where the market reverses, you create a diagonal support. You do the same thing even here. One thing about it shouldn't break. If it breaks, you enter. You do the same thing. You can create as many as you want, but you need to be using understanding. You don't just create. Same story even here. Broke, check where it breaks. Understand? Okay, it's fine. Let's say the market comes and break this point. What is it that you're going to do? You need to enter. Understand? So most of the people here, they will say what? It's a correction and an impulse. Understand? This is a correction. We're going to be having an impulse movement that has to touch here. But here, we believe that the market has to break out, retest, and then comes here. So from this position here, we're strictly going to say the market has to move to this point. But how are you going to be catching the points? You need to be creating points to enter. You need to make sure that you're inside, you're playing around. There is possibilities of the market to reverse at this certain point. What is it that it could be creating? A double bottom. I need a double bottom in order for me to break this position. Without a double bottom anywhere here, I can't approve. But if I touch here, I need to touch here, touch, understand? But as much as I haven't touched here, I'm still going down. I have 80% of my movement. I need 100%. So nonetheless, at the end of the day, your mentors will create this thing as what? As the trend inside a trend. They'll be like this. Let me take out this trend and show you how it's gonna be. Let's say it's a pure chart. Same story, guys. You just have to be creative here. You need to understand the structure. If you get the structure, everything, it's a bonus. Understand? The reason now I'm doing this is because I have the structure. I know the direction that I'm going. Understand? You can do as much as you can. Correction and impulse. Understand? So let me do this. So in the market, if you see correction and impulse, just know that the market becomes more easier. Understand? That is why I always say you can't lose when you see a correction and an impulse, because already the impulse movement Okay, you just follow the correction one. So if you can check here, we have sort of like a wedge. So it was an impulse movement, correction, impulse movement. Same story here. We're still having the same issue. We're gonna be having our impulse. I mean our correction at this certain point here. I don't know where will it touch here, but whenever or wherever it touches, it will be our correction. At the end of the day, we do what? We break, we go to the bottom. It's a pure strategy. What is it that wouldn't make us to take it here to the top? Because it's a major key. So now we're gonna go to whatever that comes in second. So whatever that comes second is what is Nasdaq. I don't like choosing. Just want to go straight to another aspect. So, okay, let's start from an H4 time frame. Remember, we analyze what we see. So from an H4 time frame, guys, what I like about Nasdaq, you can do major key everywhere from 5 minutes, 10 minutes, 30 minutes, daily time frame. You can do it anywhere. At least what is it that you need to have? You need to have a simple theory, major key. That's all. Once you have a major key, then the market becomes your playground. You understand? You play around the market. So I'm going to take it from this point here. Let me remove this thing. So I'm going to minimize it to this point because when I started trend, I want to use it on the bottom one. It has to be the same thing as the first one. So I'm going to put it here. So most of you call this thing a bullish trend, right? It's a bullish trend. So people be like, a bullish trend can't be break on Nasdaq. We can break that. They shouldn't lie to you. We broke many of them. So I want you to understand major key. So from this position here, we have a major key. So this thing will keep you bullish buying. You keep on buying because you have a bullish trend, right? But nonetheless, remember, if you have a double bottom, you'll create a new highs. It's obvious at the end of the day. But I want you to understand something simple. So if the market breaks this point, it will create what? A new major key. So if the market keeps on bouncing here, you're still on the bullish side. But if it breaks, you are on the bearish side, obviously. At the end of the day, remember, when it breaks and closes outside, you're inside your 8. Where it reverses, you do what? A quick thing. Obviously, you can't hold here. The reason of not holding here is that the market didn't reach here. So here you scalp. So you need to have position whereby you scalp, position where you hold. This point here, I wasn't going to hold because I didn't touch this top and I wasn't sure if it's the top because it was a new highs at that certain point. At the end of the day, you do what? You create another one. When it breaks, retested, did what? Fallen to the bottom. But at the end of the day, because this was just like something that came without you being aware, obviously you wouldn't create a trend from this point. It's obvious. You wouldn't. Understand? Obviously, you need to respect the touches, guys. On the second touch, there's no one who can see it. You will only see it on the third touch. Understand? Unless if it plays more than twice. Obviously, you wouldn't take the trend from this point. Understand? So let's remove this one. Obviously, we missed the entry. We didn't enter. We only entered where it broke out, and then we ate little bit by bit, but we didn't hold until the certain point. It's not the end of the day. Understand? Check this certain point here. Check it from the point. So if you can check here, it touched, right? It touched here. It touched. So once it touched, check what is it that it did. It touched here. So if you touch here, you need to touch here. But if you come back here again, you just want to pay me because I see that you haven't touched at the top. So check, it touched and then created a head and shoulder. It's obvious you're going to do what? Create trend inside a trend. Simple theory. We created here. It broke out, we ate, it came back inside, came back, broke out for the last, and then did what? Fallen. So once we come out of the major trend, we are out now. We're no longer in the major trend. We don't use the major key. So it means the major key is the end of the story now. We use support and resistance to understand our movement. So if you can check is this point. So if you can ask me, I've been trading Nasdaq for like I've been trading Nasdaq for like 2.5 years now, ne? But if you can check, I can't tell you that the market will create new highs. Ask me 40 questions. I'll tell you because of one thing. There is no double bottom. There's not a double bottom that I want. I want something like this, a beautiful double bottom. There's no double bottom. So if there's no double bottom, I wouldn't be fooled that I can come here. I know that the market will keep on manipulating me. There is no major trend as well. There is no a major trend. This is the startup of a trend. It's not a major trend. So if you can check, this is just the startup. I don't have a major trend. I don't have anything. So there's nothing that keeps on telling you that you're gonna be bullish. You will be bearish until you get tired. Understand? So what is it that you can do around 12? So at this certain point here, it's a neckline, as much as everyone can see. You're gonna be taking your buys. At this certain point here, you're gonna be taking your buys. You need to take buys based on what? On the setup. So here I prefer everyone to take buys. And then here it's a diagonal support. Why? First touch, second touch. We need to break it in order for us to say we're gonna come to the bottom. As much as we are at the top, we're still looking for bullish movement. So these things will adjust more profit and reduce losses, because you don't just enter, you enter based on your analysis. When I lose a trade, I don't get worried, I learn. When you lose a trade, sometimes you get worried because you didn't know what you're doing. But once you get to understand what is it that you're doing, you get to learn. At this certain point, you can see it's a proper support. Let me go to 15 minutes time frame. Let me go to 15 minutes time frame. So what's gonna happen at night? In my belief, I feel like the market will gap up. Once it gaps up, we kill it, we buy. Understand? We can move from this point to this point. It's obvious. But at the end of the day, we need to be participating inside. Due to what? Due to this support. For me, this support is strong. Why? Because it once created a big movement, or once stopped a big movement again. This was a big movement, stopped it, and then retested, created a big movement, created a big movement. The end of the day, we passed, retested, created a big movement, stopped the big movement as well. At the end of the day, I believe that here we're gonna be buying. So nonetheless, we're jumping to another thing, which is gold. Okay, so we're gonna be looking for what? Major key. So because it's gold, guys, we're gonna start it from the daily time frame. I'm gonna start it from the daily time frame. So first and first, you create what? Your highest point. You know what I like about the market? Will never leave you alone. Stop panicking and feeling like you're gonna be behind in life because you're not a trader. Nah, bro. This thing will be here. This thing became here when I was broke. It's even here when I'm still like this. And it's gonna be here even next day. I don't have to rush it. I just have to be patient. So from this certain point here, I can choose to take a trend from that point to this one. Due to what? First touch, the second touch matters. The second one, the third one, it's a bonus. You know, I told you that the third one, you need to kill it. You don't let it. And then what I'm going to do is that I'm going to create a trend inside a trend. So depending on what is it the nature of the market is giving me, I do it. I follow the market. I don't confuse the market. So if you can check here, I have a trend inside a trend. So a genius person can say we don't have a third touch here. So the possibilities of having a third touch, they are high. How many touches do we have here? 1, 2, 3. So for us to buy, it's more accurate. You understand? We can buy more than the sells. We can have a proper buy that can break this point. But as much as we break here, we're looking for selling opportunities. Forget about the buying opportunities. Then we're going to take another one here. So nonetheless, we're going to H4. So this is what we have on the H4. If you can check, we're still having a major key. There's no another way we wouldn't have it. So check on the last point when we break it. We move like this, check this frequently movement. And then at the end of the day, in the currencies, guys, and gold, you need to wait for it to retest. You understand? So it retested left down to the bottom, but it didn't came back to the top. So it came back to the top again there. So what you do here, you still create, what is it? A major key. You don't stop. And then there's what we call a mana key. So a mana key is from the major key. So you create it like this. So once it breaks out, close outside, you're gone. So it's just like a lot of trends. So this thing is simple. Because this one is from the major, I can create this one based on this one, but not the other one, the other way around. So most of the people will call this thing what? A trend inside a trend, which is as well allowed. You understand? You can use trend inside a trend. I'm not against it, but you need to use it at the proper time. So what you do, you can take it here. It's a trend inside a trend. It shows you the high low breakout. Do the same thing here. You can see it's a correction, but at the end of the day, in my belief that I'm gonna tell you guys, and trust me, you're gonna break here. Don't be surprised once it does that. Don't be surprised. It's not the always case whereby you find that it can break here, this kind of movement. Check where it comes from the third touch. Obviously, most of you are gonna be executing sells here. You're gonna blow your account. You need to check the last movement. You see this one, the last candlestick matters. This was a bigger sell, but it reversed. You know why? Because there's a bigger support here. So nonetheless, we're gonna jump to German data. I think the German data is the last one. Yeah, German data is the last one. So guys, truly speaking, I started trading German data trend inside a trend last week. I started trading German data this year. So I'm surprised that it also respects and it gives out like proper payments. Understand? Like it moves. So nonetheless, let's forget about the cash and focus on the market. So we're gonna go to H4. And then we remove everything here. And then we create our current highest point. And then we create our current lowest point. So I'm going to create it based on this one, not the other one. So we're going to go to the current market and check what is it that we see. Obviously, if you're here on the last week session, you heard what I said about the sell from this point. Nonetheless, it's a story of another day. And then you check. So here we're just getting major points. You can see that this thing is probably like dropping, you understand? At night, we can have a bullish movement. You know, around 12 when the market opens, gaps up, the next thing we have a bullish movement. But at the end of the day, we're coming here. That one, it's whether they like it or not. We're coming here. Understand? We coming here. So if we open with the bearish movement, we know that it's obvious now. We're dropping like heck. Okay. So once you have something like this, you can go further more to 60 minutes time frame. So obviously, most of you, if you didn't understand pure price action, you get to understand that, oh, now I get to see the whole direction. Yeah, you will. And then if you check at this certain point, we hit our trend inside a trend, which is what our major key. If you can check simple thing again, even here, we hit our major key. Check again here. We hit our major key. As much as we break here, we're dropping. We're not gonna be playing. Understand? If you can check at this point, we had our what? If you don't see it very well, go further more to the smallest time frame. You're gonna see it. This is where you need to apply other time frames. Understand? So let me wanna take it from this point when it reverses, did what? Broke out, closed outside, gone. You're inside. So what matters is to be inside. Let me fix the top one. And believe me or not, guys, there is one of the top traders who's using this as well. So that's not a secret, guys. It's something that is there. YouTube, if you search it, you're gonna get it. That's the first information that made me who I am. Check. When it breaks out, closes outside. Oh, check the drop. Boom, you killed. You're inside. Check here. It breaks out and closes outside. You entered here. It dropped, played around. At the end of the day, it broke the second one, dropped. You're inside. You will be inside. Then until you ate. Check the last one. It broke until what? Dropped. You're inside. But at the end of the day, check the point that you're at, this point. It matters as well. You know, you can't pass it without respecting it. So it means bullish movement can be occurred here at a certain point for the moment. At the end of the day, I told you where we're going. We're gonna be dropping. And I like the fact that I have the second touch here. So once I have the second touch, I have my bonuses. I know that this point at the point where I need to do what I need to touch. But if you break this support, you need to expect what? You need to expect this kind of movement here and then touch here. That's when you sell this point. I always use that. If you're on my WhatsApp, you're gonna see me doing this kind of thing, and then the next thing I'm giving an arrow with the small account killed. It's obvious. Once I break out, I retest, I move. If it passes, guys. You lost. You understand? You need to have that mentality of a trader. If you wanna make money, you need. If you have 5,000 now in your bank balance, you need to manage the 5. You don't come with the whole 5,000. You understand? You don't own this game. The game owns you. You follow what is it that gives. If it wanna pay you today, it will pay. If it doesn't, it won't. Even the brokers, if they don't wanna pay you, they won't. So yeah, guys. This is the end of our session. So if you have questions, guys, you can ask. You can ask any question. You can ask any question. You can go back, make you understand what you didn't understand. Can unmute your mic, guys, and then like let's operate.
Can I ask?
Yeah, you can ask.
Hi,
Hello.
No, do retest after breakouts in USDT happen?
Yeah, after breakout, what you do, right, is that you enter immediately after a breakout. So what I like about that is it will move to a direction, right? But a retest will be there. So what we're doing here is that you don't have to be left out. You need to eat everything. You eat retest, and then you eat breakout. Nasdaq, US30, and German 30 as well. You get it?
All right, thanks.
Yes. Hi, Roshan.
Hello.
Constance here. I would like to ask,
Okay.
so I've been doing a lot of reading from the document that you shared in the group.
Okay.
And I would like to ask around the choppy trade pattern. You know, how do you analyze that?
Okay.
And ensure that you still make money from that.
Okay. What is okay. What is the question again?
The choppy pattern, you know, the choppy trade pattern, where you are not sure what the market is doing, but then at the end of the day you find that there is a breakout, whether it's just a small movement of the market, small
I kind of like
confusing
don't
movement.
understand the question. I don't understand it.
I'll send you just a screenshot.
Okay. Yeah.
Yeah. I'll send you a screenshot of that. Maybe hopefully next week you'll be able, or when we have our next session, you'll be able to just share on that.
Okay. No problem. Can you please do that?
Sure, Ninja.
Cool.
Sure.
I'd like to ask you something, man.
No
Which
problem.
time frame do you use to check the retest?
Actually, okay, that's a good question, eh? So I want you to do something, eh? Like that one, you need to practice it very hard. You need to go from a higher time frame, eh? Practice retest movement. So once you get to understand retest movement, you need to understand one thing. The time frame doesn't only retest on the higher time frame. Understand? If a candlestick breaks out like this and passes, don't think like it didn't retest. There is what we call a same time retest. So if it breaks out, you can go further more to 5 minutes. Let me show you 5 minutes, 15 minutes, M30. But at the end of the day, it will be the first candlestick that closed. So let me show you what is it that I'm talking about. Let me go to 30 minutes. Let me go to 30 minutes. So it has to be the what? The first candlestick that closed. So this one, I can't count it. You know why? Because it closed and then did what? Move. But you see this candlestick broke out and came back, right? There is someone who retested first, which I call it the same time retest. Not the retest that you're going to wait for years, which is this one. And at the end of the day, sometimes it doesn't respect. When the candlestick breaks out with a high momentum, go furthermore to the smallest time frame. The first time frame that you're gonna meet the candlestick is closed is the time frame that you're gonna use. You see here, it wasn't closed, it closed outside, but it came back. But I wanna go furthermore to 15 minutes so that you can see the proper reaches. So this one for me, I call it a same time reaches. So if you can check on M15, it broke out and closed outside at the top side. So obviously we know that most of the traders, they're gonna be executing buys here, but at the end of the day, it came back and touched here. That's a same time retest. You understand? Not there is retest, which that is I'm saying. If you can go to a higher time frame, you'll understand that it took days for it to come here, and then at the end of the day, it came back and retested. If I can check this point here, it came back and retested, but check how it will manipulate you, because they know this one is not just a movement. It's a heavy movement bigger than this one. But here, they thought you're gonna be executing selling opportunities. Hence, you might find I can say buy. Well, I see this last candlestick, it's a selling. You know why? Because the last one broke out. At the end of the day, I did what? I understood that once you did that, you move to the top.
Thank you very much. Thank you very much.
You get it?
Yeah, I get it.
Yeah. So another question. Another question. You can ask any question, guys. Anything that confuses you. If I don't understand it, then yeah. But if I understand, I'll answer it.
Sure, Ninja.
Sure.
So
Yeah.
I want to ask regarding like psychology. How do you apply psychology based on this strategy?
Okay, based on the strategy, obviously psychology, you mean confidence and what is this? Patience and fear.
Yes.
Yeah, obviously.
Yes.
So what the thing that I would like you to have is one thing. I would like you to have what I call the 3 rules. You understand? You create your own rules. You can create 2, 1, 3 rules, but the 3 rules, it has to be something that can keep you more confident. You understand? If I have 3 rules, I need to understand that, okay, I'm having my major key here, and then the next thing I have a breakout here, which is my major trend, my major key from my major key. And then what is the third one? The third one, I believe that this thing is a head and shoulder. Let me show you how. I believe that this point here can be a head and shoulder per se. Let me say like this. I believe that this point can be a what? A head and shoulder. Then at the end of the day, I have 3 rules that tells me that this thing is gonna drop. Then that's how you're gonna execute a trade, and you're gonna execute a right trade. You don't need to kill fear. Fear has to be there in order to drive you, because if you wanna kill it, once you don't have fear, you're gonna lose a lot, because you're gonna be more confident and you're gonna start entering anywhere you want.
Okay.
Yeah.
No, thanks.
No problem.
Can I ask you something about
Yeah, you can ask anything you want.
Ninja?
Sure, I'm here.
How are we using CNBC app?
Oh yeah, the CNBC app, right? Yeah, we're gonna work on that. I'm gonna tell you when, because that one I'm gonna teach it via the phone. I'm gonna teach you via the phone, but I don't want you guys to be more on CBNC, because obviously I know all of you gonna be on 3:30. I want you guys to understand every time matters in the market. But at the end of the day, you're right. I'm gonna teach you guys about CNBC during the week. So another question. So guys, if there's no more questions, then it means for the day.
No, last one, Roshni.
Okay.
Sorry, guys. Just the last one.
Okay.
So it's not related to the market. It's related to with withdrawals, right?
Okay, withdrawal.
So I know we are withdrawals.
Okay.
I know we are using different brokers.
Okay.
So I'm still using the trade 245, right?
245.
And when you do a deposit, you obviously get your 100% as a
Bonus.
credit.
Yeah.
Yeah, as a bonus. Yes. And then when you do withdrawals, where is that money going? Because I've done this past weeks, I've done like 3. This week alone, I've done 3 withdrawals. But
So,
I'm always confused with how do I get that bonus back? Is it coming to me or is it going back to the broker?
oh, the bonus is going back to the broker. Actually, the bonus is there to help you for the equity and all of those things. So when let's say you fund a 1,000, you're gonna get 1,000. So once you withdraw the let's say you made 2,000, the equity is not actually the balance. So yeah, you're gonna actually focus on the balance. The only borrowing you the equity. Once you use it, and then let's say you went well, then you're gonna withdraw your balance only, not the credit.
Oh.
Yeah. And the credit, it doesn't protect as well, because if you run a loss, let's say you have 1,000, you run a loss of 1,000, they're gonna actually close all the trade. Yeah, so it's sort of like a marketing.
That's what I've noticed.
Yeah.
Okay. All right. Thanks, guys.
No problem.
Sure, Ninja.
Sure.
Are you going to trading only indexes only, or do you trade on MT5 like synthesis?
Okay, so what I'm doing now, I'm busy building what is this volatility Android relationship, and I haven't like really understand it. You know, I've been trying to build relationship with things in the volatility and stuff. I'm failing, but now I'm trying volatility Android.
Okay.
If I get a relationship, that's when I'm gonna update you on it.
Okay.
Yeah.
All right.
Greetings, King.
Sure.
Yes, I would like to ask about fundamentals, different fundamentals, because there is NFP, FOMC.
FOMC,
So,
yeah.
Yes. So how do we analyze it fundamentally? Because I mostly analyze using technical, and sometimes when I analyze, the technical analysis gets disrespected by fundamentals.
Okay, so the key part is that I want you to know that fundamental is stronger than, technical is stronger than fundamental. So the reason I'm saying that is because every fundamental trader is scared of technical trader. We see the direction before it can happen. So what you do is that you need to understand which position are you at when you say you're gonna sell based on technical. There is no way the market can reach a support, and then when fundamental comes, it passes without it touching it 3 times. If it touches 3 times, the more it touches the support, is disrespecting it. It means it is smelling to break it. So you need to understand which point you're at. So your technical analysis is right, but you need to fix it in a fundamental way, in an understanding of yourself that, okay, fine, this is my first time touch on this support. There is no way I can pass. But if it's the second one and the third one, there's highly possibility of passing, because they know that you know that that point is a support. Simple.
Thank you, King.
Okay, no problem.
How's it, Ninja?
Sure.
Ninja, check. I just have a question which is confusing me regarding vault markets.
Okay, vault
because last time you have said to us we must not take a 200% bonus. We must use 100. Yes, so I just want to get the clarity on what is the difference regarding those two, between 100% bonus and the 200% bonus.
Okay, you know what is it that these brokers are doing based on the bonuses, right? Actually, for you of all, it was actually advisable to not take any bonus, because this bonus thing, it's probably like a way of increasing your leverage. You own 1,000 is 500, 1:500 leverage, but you don't see that you're gonna be on 1:2,000 leverage because they give you a 200 bonus. So I feel like the 1:1,000, it's more safer because you can open a lot of. So what is it that's happening? If you fund a 2,000, okay, let me say a 1,000 account, you can open 10 trades on 200% bonus. So if you open 10 trades, each and every trade that goes 100, you blow your account. So it means it's gonna be simple for you. Sorry about that. To blow your account. So if it's 100% bonus, it means you're gonna open what? 5 into 1,000. So it means it's gonna be what? 200 per position. So I feel like 200, it's more stable than the 200% bonus. So this bonus is actually, they increase your leverage, but you don't see it. So the key part is that if you have 1,000 account, just open trades based on your 1,000 account. Forget about the credit, because at the end of the day, the credit that they're giving you is not gonna protect you. As us mentors, if you can see our interest based on the credit, the brokers sometimes they do regret putting the credit, because as we can put 20 trades same time immediately on the market, you understand? But if you're not willing to lose the cash, forget about the credit. Trade the market.
Okay,
Yeah, yeah.
thank
So,
you,
so
thank you.
the bigger the bonus, the bigger the leverage. Your own 1:500 is fine. If you used to trade currencies back then, we used to increase the leverage in order for us to open a big lot size. So the brokers do this. They give you a bonus for you to open a bigger lot size. You're not gonna even see the movement. If let's say you have 700, you open 0.05, you're not gonna see the movement. It will blow immediately. Understand? So yeah, those are, it's part of their marketing, but don't be confused based on bonuses. Whether you use 200 or 100, use based on how much you have on your balance. Forget about the bonuses, because those bonuses, at the end of the day, they allow you to apply a lot of trade, but they don't protect you.
Okay, thank you, Ninja.
No problem.
Hi.
Ninja. Sure.
Yes, I just want to ask, what is the best time to trade currencies, currency pairs?
Okay, based on currencies, for me, the best time used to be London session in the morning.
Yeah.
Yeah, and then during New York session, it's a hard time. The market is volatile, but at the end of the day, it's a time where you can back. You need to use proper risk management during New York session, and then proper entries as well will be needed.
Okay, no, thanks, Phil.
No problem.
Yeah. Hello?
Hello, I'm here.
Yeah, I want to ask a question. Will you share this video on our group chat?
Yeah, I'm gonna share it. Yeah, even I think it's best now I stop it, because if it becomes long, it will take time to share.
Okay, no problem. Thank you.
Yeah, guys. So guys, let's meet again tomorrow morning and kill the market.
Hi Ninja, can I ask something?
Yeah, you can